The biggest finance companies in the world are spending billions of dollars buying out YouTube channels and teaming up with creators, and if you're a finance specialist or a trader and you don't know why this is happening, I'm going to tell you why. Forex broker Oanda have hired Trader Nick for exclusive content, IG Group paid nearly $1 billion to acquire Tastytrade, and Australian ETF provider BetaShares have bought the Equity Mates podcast. And it's not just about companies having deep pockets. This is a fundamental shift in the way people consume financial information and make buying decisions. Because the data shows that among US investors under the age of 35, 56% now use YouTube for investment info, and this is a study from 2022. It's likely way higher now. So in this 4-part video, I'm going to explain why these companies are investing so much into YouTube. I'm going to explain how traditional marketing is getting more expensive and how people are becoming numb to advertisements. And I'm also going to explain how you can use the lessons from these companies and apply them to your own business. Part 1, the $1 billion shift. So I'm 31 and I studied accounting at university, and I remember back in the day, financial services companies had it really easy. You'd run a few ads in the Financial Times, you'd hire a sales team to do cold calls, maybe sponsor a conference or two, and then you'd have a steady lead of prospects. But that world is rapidly changing, and companies that don't understand this are seeing their marketing effectiveness decrease every year. When Tastytrade started their YouTube channel, they weren't trying to build a brokerage company, they were simply trying to deliver trading education via YouTube. But in the process, what they did is they built something that is very difficult to build with traditional marketing campaigns, and that is trust and authority in their space. And when they did build the brokerage company, they already had a following of people who were eager to join their platform. And these are exactly the same reasons why Oanda partnered with Trader Nick. They recognized that Nick had built something that traditional advertising can't buy, that is an engaged audience of people who actually trust his analysis and recommendations. YouTube creators, they're not just individuals anymore, but trusted authorities in their niche. But this shift goes a lot deeper than trust. It's about the costs and economics of traditional marketing. Part 2, why traditional marketing is failing. The cost of traditional marketing has skyrocketed while effectiveness has fallen. Google Ads cost per click rose 12.9% year over year in 2025 to $5.26. And for finance and insurance specifically, the average cost per click was $3.46. And Facebook and Instagram are similar. In Q4 2024, Meta spend was up 15% year over year, and the finance and insurance industry was at $5.57 per click. But the real issue isn't cost, it's about how consumer behavior has fundamentally changed. People have developed what marketers call ad blindness, which is in the modern day, people have become overloaded with so many ads that they've become numb to advertising. They ignore banner ads, they skip video ads, and they've become increasingly skeptical of traditional sales approaches. Meanwhile, YouTube has become the second largest search engine in the world, with millions of people every month searching for trading strategies, investing advice, and financial education. And they aren't cold prospects being interrupted from whatever they're doing, they're warm leads that are actively searching for solutions to their problems. The average person now spends over 100 minutes a day watching video content, and educational content in the financial space is one of the fastest growing categories on YouTube. And unlike a Facebook ad that disappears when your budget runs out, a well-optimized YouTube channel can generate traffic and leads for years if it has really good SEO and it ranks in the YouTube search. But it's not just about better reach, it's about improving conversion rates. Part 3, the authority equation. So in today's market, authority beats advertising every single time. So think about your own behavior. Before you choose a broker, an advisor, or even a trading course, what do? You research, you watch videos, you try to understand who's behind the product and whether they know what they're talking about or not. YouTube isn't just a marketing channel, it's a tool for building authority, and when people watch your videos consistently, they start to see you as an expert in your field. By the time they're ready to make the purchase, you're not competing on price or features, you're the obvious choice because you're the person who educated them in the first place. And this is exactly why BetaShares acquired Equity Mates. They weren't just buying a podcast or a YouTube channel, they were buying years of authority that Equity Mates had built with Australian investors. When someone finds you through the YouTube search, they're already qualified. They're someone who's actively looking for information about your area of expertise, compared to cold outreach where you may be interrupting someone who has zero interest in whatever you're offering. And unlike traditional marketing where you have to keep spending to get results, YouTube compounds on itself. Each video builds your authority, and each new subscriber becomes part of your audience and part of your ecosystem. So let's break down the exact process that is working right now. Step 1, you need to understand that successful finance channels, they're not just posting random trading tips or market commentary. They're solving specific problems that their ideal clients are actively searching for. Step 2, you need to optimize your videos for the YouTube search. Start by making a top 20 list of the questions that your prospects most often ask you. Things like, how do I start day trading with $1,000? Or what's the difference between swing trading and scalping? These aren't just video ideas, these are search terms that people are typing into the YouTube search every single day. And here's a quick test that you can do right now. Go to YouTube and start typing how to trade and watch what the autocomplete does. These suggestions, they represent real searches from real people looking for the exact kind of expertise that you have. Step 3, you need to structure your content in a way that actually works. Don't just create 30-minute rambling videos with no structure. The most successful channels are following a simple formula. That is, in the first 15 seconds, hook your viewer, then deliver on your promise with clear actionable steps, and then end the video with a clear 4th step. Step 4, correct thumbnail psychology. Your thumbnail is like a movie poster and it needs to stop the scroll. Most finance specialists are using either a boring TradingView screenshot or a headshot of themselves as their thumbnails, whereas the ones with millions of views, what they're doing is they're using bold text, contrasting colors, and visual elements that spark curiosity. Pause the video here for some quick inspiration from some of the biggest finance YouTubers. Step 5, your title needs to be searchable, but it also needs to be clickable. Instead of market analysis for August 2025, try why August could crash the markets, 3 warning signs. Same information, but one gets clicked on and one gets ignored. Step 6, you need to be consistent. Because here's the reality of organic content. It's not about going viral once, it's about showing up week after week and delivering value. The most successful finance channels post at least once a week for multiple months or years on end. But you don't need to spend 40 hours a week doing this. Successful creators, they batch their content. So spend 1 day a month planning your next 4 to 8 videos, spend another day recording them all, and then you have a month's worth of content ready to go. Step 7, nurture your audience. YouTube isn't just a publishing platform, it's also a community, and the channels that grow fastest, they respond to comments, they ask questions in their videos, and they make content based on what their audience is looking for. Step 8, analytics and optimization. You need to treat this like a business and not a hobby. Track which videos perform best, which thumbnails get the highest click-through rate, and which topics get the most engagement, and then double down on what works. The finance professionals who are doing really well on YouTube, they're not looking at next month, they're looking at building assets that can compound over years. Each video becomes a piece of content that can attract prospects, demonstrate expertise, and build authority years after publishing. But knowing the strategy and having enough time to actually implement the strategy are 2 separate things entirely, and most finance specialists are too busy with the ins and outs of their business to actually have enough time to dedicate to YouTube to actually make it work. So if you want to get more clients from YouTube and you want a complete done-for-you system that only takes 2 to 3 hours a week of your time to make it work, click the link below and I'll see you in the next video.